Investors have already learned the data on the year's employment and inflation. Now they were ready to find out how the Fed estimates the current condition and the future of the US economy. The FOMC meeting will take place on Wednesday. Of course, it will be the most important event of the upcoming trading week. Let's learn more about this and other events in our video calendar on InstaForex TV channel. On Monday, China's industrial production report may shape market sentiment. The report will be provided for 2 months, January and February. The fact is that in February, Chinese enterprises are closed due to the celebration of the Lunar New Year. Economists suppose that industrial production will surge by 30% on a yearly basis. In 2020, January and February was a period of total lockdown imposed amid a rapidly rising number of virus cases. Now, economists forecast an unprecedented jump that may encourage market participants. Thus, the Australian dollar may show a short-lived advance due to rising appetite to risky assets. Notably, the Australian dollar is the national currency of China's main supplier of raw materials. However, on Tuesday, the Australian dollar may resume falling against the greenback. The Reserve Bank of Australia will publish its monetary policy meeting minutes. Last time, the regulator kept the key interest rate at the level of 0.10%. Moreover, it said that it was not planning to raise the key rate until inflation hit the targeted levels between 2 and 3%. The Reserve Bank of Australia is also ready to adjust its asset purchasing program according to the market situation. After such announcements, pressure on the Australian dollar became even stronger. Thus, if the monetary authorities telegraph their intentions again, this may lead to the sell-off of the Australian dollar. Nevertheless, analysts do not expect acceleration in the US dollar rise. On Tuesday, the US will report on its retail sales. The previous report unveiled the largest jump last seen in September 2011. That's how economists expect a correctional movement. Notably, the retail sale data reflects consumer activity. At the same time, consumer spending accounts for about 2/3 of the US GDP. Thus, on a monthly basis, the indicator may slide by 0.5% amid lower demand, caused by a surge in consumer prices. This information may weaken the US dollar. However, optimism supposes that the real data may exceed the forecast due to the improvement of the US labor market situation. If these optimistic predictions come true, the greenback is likely to go on gaining in value. On Wednesday, all eyes will be turned to the Fed's rate decision. The regulator will hardly change the key interest rate. At the same time, changes in the Fed's rhetoric and forecasts provided by the monetary authorities may shape the market sentiment in the long term. Judging by the recent positive macroeconomic reports, the US Fed may drop hints about a rise in the key interest rate at the end of this year. In this case, the US dollar may advance. However, if the US Fed announces its intention to keep its ultra-loose monetary policy unchanged, the greenback may fall. You were watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable deals with InstaForex.